All right, let's talk about one of the most interesting earnings reports we've seen this season, and it comes from Zoom. You know, the company that basically became a verb during the pandemic. Well, they just dropped some numbers that sent some incredibly mixed signals to the market. So we're going to dig in and figure out exactly what's going on. Okay, so let's set the stage here. When you first look at Zoom's latest results, it's like you're reading two completely different stories at the same time. It's a real paradox. Some of the numbers look fantastic, while others, well, they're raising some serious eyebrows. And that confusion is exactly what we need to unpack. So here it is, the core of the confusion. On one hand, you've got revenue. Zoom actually beat expectations there, bringing in more money than Wall Street thought they would. That's a check in the win column. But then, on the other hand, they missed on earnings per share. So right out of the gate, you have a beat and a miss on the two biggest numbers everyone looks at. And how did the market react? Well, not well. The stock took an immediate nosedive, dropping almost 12%. And what that tells you is that investors were clearly paying way more attention to the bad news than the good news. They looked right past that revenue beat and saw something that worried them. And that, right there, is the big question we're going to answer. What is lurking behind that solid revenue number that spooked investors so badly? To figure it out, we've got to look at both sides of the coin. The bull case, all the reasons to be optimistic about Zoom, and the bear case, which reveals those hidden problems. Let's start with the good stuff, the bull case. And really, it all comes down to the biggest buzzword in technology right now, AI. See, Zoom is making a massive bet that it can be more than just a meetings company. They are full steam ahead on transforming into an AI-powered communications platform. And you can hear this straight from the CEO, Eric Young. He's talking about turning conversations into coordinated execution. What that really means is he sees a future where a Zoom call isn't just a call. It's the starting point where AI helps your team actually get stuff done. That's the grand vision. And look, this isn't just some fuzzy, far-off vision. The proof is in the numbers. Get this. Every single one of their top 10 biggest customer experience deals last quarter had a paid AI feature bundled in. 100%. That shows their strategy is already making them money. And it's not just the huge mega deals either. Look at their AI companion tool. The number of people using it every month has tripled in just 1 year. That tells you that everyday users are actually adopting these new AI features and making them a part of their regular workflow, which is huge for long-term growth. Now for the second part of the bull case, and this is just as important. Zoom is proving that it's not one-trick pony anymore. They are successfully selling products that go way beyond their famous video meetings. You can see where that new energy is coming from right here. Their Zoom Phone product, which replaces old-school office phone systems, is seeing solid mid-teens growth. But even better is their contact center business. That's growing in the high double digits. These aren't side projects anymore. They're becoming serious growth engines for the company. And we're not talking about small wins here. We're talking about massive companies choosing Zoom over the old guard. I mean, think about it. They went into a Fortune 10 company and replaced Cisco for 140,000 employees. They're even displacing Microsoft Teams in some big accounts. That is a huge vote of confidence. So if everything's that great, the AI is working, new products are growing, they're winning huge deals, that brings us right back to our original question. Why on earth did the stock drop? This is where we have to unpack the bear case and find out what's really worrying Wall Street. Okay, to understand the main issue, we need a quick lesson on some financial jargon. The term is deferred revenue. Now, don't let the name scare you. All it means is money that a company has already collected for services it hasn't delivered yet. Think of it like a subscription you paid for up front. It's a super important number because it gives you a peek into future growth. So here's the problem. Zoom said they expect that future-looking metric, deferred revenue, to grow by only 1 to 2%. That's a tiny number, and it signals a potential slowdown. Now, part of the reason is that they're giving transition credits to big new clients to help them switch over, which pushes payments out. On top of that, they lost a big customer who was reselling their tech, and they're expecting about $50 million less from interest income. You add all that up, and it paints a much more cautious picture of the future. But despite all those headwinds, Zoom's leadership didn't shy away. They laid out a very clear financial plan for the year ahead, basically telling Wall Street, we see the challenges, and here's how we're going to navigate them. And here's what that plan looks like. They expect to finally cross that $5 billion revenue line, which is a big milestone. But look at the profitability. Over $2 billion in operating income and nearly that much in free cash flow. Those are some seriously strong numbers for a company this size. So, what does this all mean when you put it together? The company is essentially telling us to expect a period of slower, more moderate growth. But at the same time, they're an absolute cash-generating machine, and they plan to stay incredibly profitable while they invest in this next big chapter with AI and their bigger platform. And that leaves us with the big, final question hanging over everything. Zoom's strategy is crystal clear. They want to evolve from a single, amazing product into an all-in-one AI-powered system for how we work, and they're making real progress. The problem? They're fighting against some of the biggest and richest tech companies on the planet. And the ultimate question for everyone is whether this bold new vision is actually enough to win that fight.